What's up everybody, it's Tahir and today we're diving into a topic that's near and dear to my heart, making serious money as a trader. Now, I'm not talking about those get-rich-quick schemes you see all over the internet. I'm talking about building a sustainable strategy that can put real cash in your pocket. Listen, I get it. Trading can seem intimidating, especially when you're just starting out. You've got charts, indicators, and enough jargon to make your head spin. But here's the thing. It doesn't have to be that complicated. In this video, I'm breaking down my proven framework for making your first $10,000 in the markets. We're going to cover everything from leveraging prop firms to mastering one killer setup, hacking your dopamine for consistency, and understanding the power of causal confluences. So buckle up, grab your notebooks, and let's get started. One of the biggest hurdles for new traders is the lack of capital. It's a common scenario. You have the skills, the knowledge, and the drive, but without sufficient funds, your trading potential is severely limited. This can be incredibly frustrating and can even deter many from pursuing their trading dreams. You need money to make money, right? This age-old adage holds especially true in the world of trading. The more capital you have, the more opportunities you can seize, and the greater your potential returns. But how do you get that initial capital if you're just starting out? That's where prop firms come in. Prop firms, or proprietary trading firms, provide traders with the capital they need to trade. They essentially back you with their own funds, allowing you to trade larger amounts than you could on your own. These firms give you access to way more capital than you'd have on your own, which can seriously amplify your profits. Imagine having the financial backing to take advantage of more significant market movements and opportunities. Think about it like this. If you're trading with a $10,000 account and you make a 5% return, that's $500. Not bad, right? It's a decent return, but it's limited by the size of your account. But if you're trading with a $100,000 account from a prop firm and make that same 5% return, you're looking at a cool $5,000. The difference is substantial and can significantly impact your financial growth. See the difference? The larger the capital, the larger the potential returns. This is the power of leveraging capital through a prop firm. But it's not just about the increased profit potential. Prop firms also offer a wealth of resources and support that can be invaluable to traders. Prop firms also help you manage risk more effectively. They provide tools and guidelines to ensure that you are trading responsibly and not taking unnecessary risks. They have strict risk management rules in place that force you to trade responsibly. This is crucial, especially when you're dealing with larger sums of money. It helps protect both you and the firm from significant losses. This is crucial, especially when you're dealing with larger sums of money. The more capital you have, the more important it is to manage it wisely. And here's another huge benefit. Trading with a prop firm takes a lot of the emotional pressure off. When you're not risking your own money directly, it can make a world of difference in your decision-making process. You're not risking your own money directly, which can make a world of difference in your decision-making. This can lead to more rational and less emotionally driven trading decisions. We all know that emotions can be a trader's worst enemy, so anything that helps you stay level-headed is a major win. Prop firms provide a structured environment that can help you maintain your composure and focus on your strategy. Now, I know what you might be thinking. Getting funded by a prop firm sounds difficult, and yes, it does require effort and dedication, and yeah, it does take work. You'll need to demonstrate your trading skills and prove that you can manage the firm's capital responsibly. You'll need to prove your skills and pass an evaluation process. This process is designed to ensure that only the most capable and disciplined traders are given access to the firm's capital. But trust me, the rewards are well worth the effort. Once you pass the evaluation and get funded, you'll have the opportunity to trade with significant capital, access valuable resources, and potentially achieve substantial financial gains. It's a challenging journey, but for those who are committed, the benefits can be life-changing. Now let's talk about strategy. The trading world is full of shiny objects, indicators, strategies, expert opinions. It can be overwhelming. But here's the secret. You don't need to know everything. In fact, trying to master too many things at once can actually hurt your trading. Instead of spreading yourself thin, focus on mastering one high-probability setup. This means finding a trading strategy that consistently produces profitable trades in different market conditions. It could be a specific candlestick pattern, a combination of indicators, or anything that works for you. Once you've identified your setup, Create a strict checklist that outlines the exact conditions that need to be met before you enter a trade. This checklist is your trading Bible. It removes emotions from the equation and ensures you're only taking trades that align with your strategy. Remember, consistency is key in trading. By mastering one setup and sticking to your checklist, you'll develop the discipline and patience needed to succeed in the long run. It's not about chasing every single opportunity, it's about waiting for the perfect pitch and then knocking it out of the park. Chapter 3. Hack your dopamine for consistency. Let's face it, trading can be a roller coaster of emotions. The highs and lows can be intense, and it's easy to get caught up in the moment. One minute you're riding high on a winning streak, feeling invincible, and the next you're staring at a string of losses, questioning your decisions. This emotional volatility can wreak havoc on your consistency and ultimately sabotage your success. It's not just about the financial loss, it's about the mental toll it takes. But here's the good news. You can actually hack your brain to stay motivated and consistent, even when the going gets tough. It's all about understanding and leveraging the power of dopamine. It all comes down to understanding how dopamine, the feel-good hormone, works. Dopamine is a neurotransmitter that plays a crucial role in how we feel pleasure. Our brains are wired to seek pleasure and avoid pain. This is a fundamental aspect of human behavior that has helped us survive and thrive. When we achieve a goal, our brains release dopamine, which makes us feel good and motivates us to repeat that behavior. This is why achieving even small goals can be so satisfying. On the flip side, when we experience a setback, our dopamine levels plummet, leaving us feeling discouraged and demotivated. This can create a negative feedback loop that is hard to break. So how do we apply this to trading? The key is to manage our dopamine levels by setting ourselves up for frequent small wins. The key is to break down your larger trading goals into smaller, more achievable milestones. This way, you can experience the satisfaction of achievement more frequently. Instead of focusing on making $10,000 right away, aim for a daily or weekly profit target. These smaller targets are more manageable and can provide regular dopamine boosts. Each time you hit that target, your brain gets a hit of dopamine, reinforcing the positive behavior and keeping you motivated. This creates a positive feedback loop that can help you stay consistent. Celebrate your wins, no matter how small they may seem. Recognizing and celebrating these achievements can help maintain your motivation and drive. Acknowledge your progress and give yourself permission to feel good about it. This isn't just about feeling good, it's about creating a sustainable path to success. This positive reinforcement will create a powerful feedback loop that fuels your consistency and propels you towards your ultimate goal. By hacking your dopamine, you can turn the emotional roller coaster of trading into a more stable and rewarding journey. Chapter 4. Add causal confluences to your strategy. Now, let's talk about taking your trading to the next level with causal confluences. This concept is crucial for traders who want to move beyond the basics and truly understand the market dynamics. This is where you go beyond simply identifying technical setups and start understanding the why behind market movements. It's about digging deeper into the factors that influence price action. Think of it like this. Technical analysis is like looking at a map, while causal confluences are like understanding the terrain. The map shows you the path, but the terrain tells you how easy or difficult that path will be. Both are important, but understanding the terrain gives you a significant edge. It allows you to anticipate obstacles and opportunities that aren't immediately visible on the map. Causal confluences involve identifying the primary market drivers, things like economic news releases, central bank announcements, and geopolitical events, and understanding how these factors interact with each other, and aligning your trades with these drivers. This alignment can significantly enhance your trading strategy by providing a more comprehensive view of the market. By understanding the fundamental reasons behind market movements, you can increase your probability of being on the right side of the trade. This deeper insight can be the difference between a good trade and a great trade. For example, let's say you're looking to buy a currency pair. You've done your technical analysis and identified a bullish setup. You've identified a bullish technical setup, which is a good start. But to increase your chances of success, you need to look at the bigger picture. But you also notice that the country's central bank is about to announce a rate hike. This piece of fundamental information can have a significant impact on the currency's value. This confluence of positive technicals and a hawkish central bank policy creates a higher probability setup for a long trade, It's this combination of factors that can give you the confidence to execute the trade. By incorporating causal confluences into your trading strategy, you're essentially stacking the odds in your favor. You're not just relying on one type of analysis but combining multiple perspectives to make more informed decisions. You're essentially stacking the odds in your favor. This holistic approach can lead to more consistent and profitable trading outcomes. You're no longer just relying on technical signals, you're understanding the underlying forces driving the market. This deeper level of understanding can set you apart from other traders. By mastering both technical and fundamental analysis, you can develop a more robust and adaptable trading strategy. This dual approach can help you navigate the complexities of the financial markets with greater confidence and precision. Outrow, your journey to $10,000 and beyond. Look, trading success isn't about intelligence or luck, it's about time, consistency, and the right approach. It's about putting in the work, mastering your craft, and developing the discipline to stick to your plan. By leveraging prop firms, mastering one setup, building habits that hack your dopamine, and applying causation-based confluences, you can achieve your first $10,000 and build a foundation for long-term success. Remember, this is a marathon, not a sprint. Focus on the process, stay consistent, and the results will follow. If you're ready for more in-depth strategies, check out my other videos, where I break down setups step by step with case studies. For even more support, consider trading live with me and my team during London and New York sessions. Remember, a restricted trader is a profitable trader.